Have you ever had the feeling you're watching a magic trick? The magician forces you to look at his right hand, where a dramatic flame erupts, capturing all of your attention. But the real trick, the one that matters, is happening silently in his left hand. Right now, the crypto market is that magician. All eyes are on the fire, the daily price swings, the fear-mongering headlines. But the most significant wealth transfer in modern history is happening in the shadows, and almost everyone is missing it. In the next few minutes, we will ignore the magician's right hand and expose the secrets of his left. We'll connect the dots between a shocking $100 million DeFi heist, the hawkish words of the world's most powerful banker, the silent capitulation of Bitcoin's most important players, and the quietest, most significant Bitcoin investor to ever enter the market, a sovereign nation-state. Stay with me, because what you are about to hear will change how you view this entire space. Let's start with the fire, the distraction. This week, the DeFi space was rocked by another massive exploit. The cross-chain protocol, Synapse Bridge, reported a catastrophic security breach, with attackers draining over $120 million in assets. The attack was a masterclass in complexity. The perpetrators exploited a sophisticated re-entrancy flaw combined with a compromised Oracle price feed. This allowed them to repeatedly borrow assets against artificially inflated collateral before the system's security checks could react. Within hours, the protocol's native token plummeted over 60%. But the damage was far greater than the money lost. It created a contagion of fear. Trust in all cross-chain infrastructure, the vital highways of the DeFi ecosystem, was shaken. This is the story the mainstream media loves. Crypto is the Wild West, risky, and full of thieves. This is the magician's right hand, burning brightly for all to see. But now, let's look at the left hand. While the market was panicking over the hack, a quiet rumor, backed by irrefutable on-chain data, began to surface, a rumor so significant it dwarfs any DeFi exploit. Reports from blockchain intelligence firms suggest that a wallet address, which has been accumulating thousands of Bitcoin with surgical precision over the last 6 months, belongs to the government of Singapore Investment Corporation, or GIC, one of the world's largest and most respected sovereign wealth funds. The wallet, now dubbed the Singapore Sentinel by on-chain analysts, never sends funds to exchanges. It only accumulates, using hundreds of smaller transactions from over-the-counter desks to avoid moving the price. This is the unmistakable fingerprint of a sophisticated, long-term accumulator. Let this sink in. This isn't a tech CEO or a hedge fund making a bet. This is a nation-state, a manager of a country's entire wealth reserve, discreetly converting its assets into a neutral, non-sovereign store of value. This move is a direct response to global trends of de-dollarization and geopolitical uncertainty. They are playing a century-long game, hedging against the inevitable debasement of all fiat currencies. While retail investors sell in fear after a hack, the world's smartest, most patient capital is buying their coins, securing a position in what they see as a future global reserve asset. The question is no longer if nations will adopt Bitcoin, but which ones are already doing it in secret. This creates a powerful conflict because this bullish conviction is running into a massive headwind from the global economy. This week, all eyes were on Federal Reserve Chairman Jerome Powell. After the latest FOMC meeting, his message was brutally clear. Do not expect interest rate cuts anytime soon. This higher for longer policy acts like a gravitational brake on risk assets. When safe government bonds pay an attractive yield, there is less incentive to pour money into volatile assets. Furthermore, it directly impacts the crypto industry's health. It makes it more expensive for Bitcoin miners to finance their massive electricity costs and for crypto companies to raise capital for development. This pressure is reflected in the US dollar index, or DXY. When the Fed is hawkish, the dollar strengthens and, historically, a stronger dollar has an inverse correlation with Bitcoin's price. The Fed's iron grip is the single greatest challenge preventing a full-scale bull run. This intense pressure from the Fed is creating another critical, behind-the-scenes event: potential miner capitulation. Bitcoin miners are the backbone of the network, but they are also businesses with massive operational costs. When the price of Bitcoin stagnates and their costs remain high, their profit margins are squeezed to the breaking point. On-chain indicators that track miner profitability, like the hash ribbons, are beginning to flash warning signs. This indicates that some miners may be forced to sell their treasured Bitcoin reserves just to stay afloat. While a miner capitulation can lead to short-term selling pressure and price drops, it has historically marked the point of maximum pain, often preceding a major market bottom and a new recovery phase. It's a painful but necessary cleansing of the market. And this complex economic situation is now bleeding into a new arena: politics. For the first time, cryptocurrency has become a key issue in the upcoming US presidential election. The battle lines are being drawn. On one side, candidates are promising innovation and regulatory clarity to attract the millions of crypto voters. On the other, a platform of stricter control and consumer protection. But the fight goes beyond the presidency. In Congress, powerful committees are chaired by both crypto skeptics and allies, and a multi-million-dollar lobbying effort from companies like Coinbase and Andreessen Horowitz is working tirelessly to influence policy behind closed doors. The future of crypto in the world's largest economy could be drastically altered by this election, adding a layer of political uncertainty the market has never had to price in before. However, beneath all this macroeconomic and political drama, the most important story may be the quiet evolution of Bitcoin itself. While the world debates its price, developers have been building Bitcoin's second act, Layer 2 scaling solutions. Networks like Stacks, Merlin Chain, and the burgeoning BitVM ecosystem are seeing an explosion in value and activity. The total value locked, or TVL, on these Bitcoin L2s has quietly surpassed $5 billion. This isn't theoretical, it's a functioning economy being built from the ground up. On Stacks, developers are building DeFi protocols that allow users to borrow against their Bitcoin. On Merlin Chain, new gaming platforms are emerging that use Bitcoin as their native currency. This technological leap is the long-term bullish thesis that is completely ignored by mainstream analysis, transforming Bitcoin from just a passive store of value into a productive, programmable asset. So, here is the full picture. We have a market being pulled in 5 different directions. Fear from sophisticated hacks. Unprecedented, silent conviction from sovereign wealth funds. Immense macroeconomic pressure from central banks, leading to stress on miners. A new and unpredictable political battlefield. And a quiet, foundational technological revolution on Bitcoin itself. The market is no longer a simple game of bull versus bear. It's a complex, multidimensional chessboard. Understanding where these powerful forces intersect is the only way to navigate the path forward and see through the magician's illusions. If this analysis provided you with real value and a clearer perspective, please take a second to support the channel. Like this video, share it with a friend who needs to see the bigger picture, and be sure to subscribe and hit the notification bell so you never miss an investigation. Your support is crucial. Thank you for watching.